In today's video, you guys are going to be sitting on the sideline in one of my premium classes teaching our students my most profitable swing trading strategy for crypto. It has not just helped me make $20,000, but over $100,000 within the crypto market. And I believe if you guys just hang on and sit tight for this entire video, it can help give you that jump start and plant the seed within you guys' minds to make your first $100,000 in crypto as well. And for sticking till the very end of this video, I'm going to be throwing in a free bonus for every single one of you guys as well. So make sure to watch until the very end. I'm going to quit yapping. Let's jump into this live class. Enjoy. I think we're ready to start. Number one is going to be how to set up your Bitunix account, placing your first trade, how to do it, what buttons to click, all that good stuff. And then the meat of it, which is my exact 7-step strategy, which is the strategy I use currently. I'm not just going to be teaching a strategy that I don't use. This is something that has helped me make thousands and thousands of dollars and actually helped me make my first 100,000 in crypto. This is the strategy that really clicked for me and I kind of mastered first before moving on to others. So hopefully we can do that today. Now, the goal of today isn't to teach you to be an absolute profitable trader overnight because that is just impossible. Trading needs a lot more respect than that. There's a lot of people in this industry that like to kind of sell people on a dream of you can get rich really quick in day trading. Yes, it is true, but it takes a lot of hard work and a lot of time dedicated to the skill. If you think about it, if you're a basketball player and you're trying to go to the NBA, you have to train a ton behind the scenes, practices, training, lifting, all that good stuff to really make that final shot in the game. Same thing with trading. You have to do so much behind the scenes that a lot of people don't want to talk about because it's going to hurt their sales because they want to just sell you on something that is easy in this false hope and dream. Okay. So I just want to set that expectation straight. But tonight I'm going to plant the seed in your brain to help give you that jump start that a lot of people need, in my opinion. We're going to know exactly the 7-step blueprint. And if you guys want to master this blueprint, all you have to do is practice it. First thing we're going to cover, like I said, how to set up your software and trade on it. And then my exact 7-step strategy. And then risk management and position sizing. Because for beginners, this is one of the biggest things I see a lot of you guys blow your account on. And then obviously at the very end, a special gift for staying to the end. So that is why you're going to want to watch all the way through. You'll see these color codes are for a reason. So each section we're in, it'll be color coded. First step is going to be signing up for Bitunix, creating your Bitunix account. This is going to be our trading software that we're going to be taking all of our trades on. I'm going to throw it right here in the chat. First step is going to be clicking that link and going to create an account. Email, password. That's it. So first set up a Bitunix account just through the link in there. Every single one of you guys has to go and do that first. Next thing we're going to do is going over how to fund your account and then understanding how to trade on it. So you guys should have clicked the link. It's going to pull you up to something like this. Okay. Yes, we have a partnership with them. I'm not just pushing them because we have a partnership with them. I've actually used them before we had a partnership with them. And this is something I would literally recommend to my friends and family. And my friends and family do use this. So it is my favorite software, hands down. Email, password, that's it. And the next thing you're going to want to do, guys, you're going to want to click this wallet at the top right here. You're going to want to click deposit, okay? Once you click deposit, it's going to look like this. You're going to select USDT, Ethereum, and then it's going to give you the address you want to send your USDT to, okay? I would not buy it on here. I would not, because you have to have KYC, which is know your customer. Just not something I like or recommend to anybody. I would always buy it on another crypto wallet platform and just send it over to the address on here. And then it'll need to go to your futures account. Now we're going to go over taking trades. So first thing up here, you're going to see is a number and an X. This is going to be your leverage, how much leverage you guys want to use. Next thing is going to be your available balance. This is how much actual liquid cash you have in your account. And then you're going to have your buying power. So 100% would be 100% of your buying power. So forth. Pretty easy to understand. You just drag this to how much you want to buy or sell in. And then this is where a lot of people get confused is how much is this? So if I do 100%, what is 100% of? It's not 100% of your available. It's 100% of your available times whatever number you select up here, your overall buying power. Hopefully that makes sense. If not, again, I have a full video breaking this down. Say I open a long right here. Okay. I have all these settings set. I open a long. You're going to see your position come right here, this green line. It's very easy. All you're going to do is drag your stop loss down. This is my stop loss. So all you do is just drag this to wherever you want your stop loss. And it's going to put your stop loss in. And you can always adjust this as you go. Same thing with TPs. Your TP right here is all out. So you can drag that wherever you want to go. And then if you ever want to close partial, what you're going to want to do is there's two ways of doing it. If you just want to set an automatic limit order, which is saying if the price gets up to 2,800, I want to be filled on half. What you're going to want to do is you're going to want to type in 2,800 here and then hover over this and select 50%. And then if you just want to get build 50% at market, hover over this, click market, and then click 50%, and then click close. And that'll close you at whatever price it's at, 50% of your position. Flash close, you already understand that. It's pretty much get me the frick out of this no matter what. Like just close everything I have. And that is it. Now we can take a deep breath. Okay. We have our software set up. We're good to go on that. We somewhat know how to trade on it. You don't really need to know really too much right now, and that's okay. I'm just planting the seed for you guys. We're going to kind of grow on this with time. Don't expect to learn everything I just said. Okay. I said it in one breath very quickly, just an overall view of it. Okay. I hope you guys understand, because this is what I want to get into. This is what you guys actually came to this for. And this is what I want to share with you guys to help you guys make your first 100K within crypto and hopefully more. So that's the goal. My 7-step blueprint. Okay. This is something that I've used for the past 5 years in my crypto trading. And it is something I currently use. Like I said, I'm not going to teach you something I don't use myself, because I think that is foolish and it's not fair to you guys. So this is my 7-step blueprint. So first off, we got to look at the overall trend, and we're going to dive into this very heavy. I'm just going to breeze through the 7, and then we'll touch on each of them individually. So first thing's your overall trend. You look at the overall trend of the whole entire market. Then we look and we draw our key levels, and I'll explain what all these are in a minute, so just hold tight. Then we're going to look for displacement, and then we're going to use our Fibonacci, corrective pullback, fair value gap, and then risk management and position sizing. Those are the 7 tools that I use every single day and on every single trade I take. Let's run through these again. We look for the overall trend, check. Key level, check. Displacement, check. Fibonacci, check. Corrective pullback, check. Fair value gap, inverse fair value gap, check. Last thing, risk management, because you have to have risk management before you enter a trade. So all of these 7 should check, and I will create a checklist for you guys and send it to you guys if you guys want me to on Google Docs, but every single one should be checked, and then you can take a trade. So that means we planned our whole entire trade before we're entering. Number 6 is fair value gap or an inverse fair value gap, which we'll go over this in a little bit. Step 1, overall trend. So normally I'm looking at larger time frames. I'm looking at the daily or weekly. That's the ones I'm looking at the most. And I'm just kind of looking at the overall market as a whole. I'm just trying to step back, no matter what my daily bias is. I'm just trying to step back a little bit and see the overall market. Okay. Are we looking bullish? Are we looking bearish? Are we kind of in a choppy market? Like where are we at as a whole? You know, as far back as I can see, I just want to reset my brain. Each day I look at the market, I just want to reset it. So looking at the market here, first things first, I would say we're definitely looking bullish until we get a break of these right here before we broke out. This is our first time coming back and touching these. So I'd say overall, we still look bullish. You know, overall market structure is bullish even to this current day. But again, overall trend, there's not really much to it. We just want to step out and just look at the overall market before going down to the lower time frames. So step 1, overall market, check. Okay. That one's very basic, to the point. It just resets your view every time you want to be looking at that. Number 2 is going to be key levels. Okay. And I kind of want to touch exactly what a key level is, because a lot of people might think that it is just a one line. It's not a range. Okay. A lot of people might think that, but they are totally wrong. A key level in any support and resistance levels are a range. As you can see here, we have a range. It's not just one thin line like this that price perfectly touches off of in respects. We all wish that would happen, okay? And it doesn't. So key levels are ranges where price respects more than 2 times. The more the merrier. So the more price respects these levels, the stronger these levels hold and the more value these levels hold. So if we look right here, I'm normally looking on the 1 hour and 4 hour charts for these key levels. So normally I'll start on the 4 hour and then I'll go to the 1 hour to see where those align. And I'm drawing ranges where I see price respect more than 2 times. Normally I look for like 4 or 5, you know, again, the more the merrier. So if we look here, I have 3 gray lines, levels, ranges. These are my key levels that I have drawn on the 4 hour chart. This is the 4 hour chart. So what I see here first is this level right here, because we respect it. 1, 2, 3, 4, 5, 6, 7, 8, and then we break through it. Okay. Another one would be this line up here, because if you look, we respected it once, we broke through it. Now it's support 2, 3, 4, 5, 6, 7, 8, 9, 10, and then we break through it. 11, 12, because now we're bouncing off of it 2 more times to the downside. And then here's a little one that we could see on the 1 hour that also aligns with the 4 hour that has no previous history. This is one that it's kind of creating currently as we see it soaking at these levels. And then now that we broke below it, we did reject off of it once. So this one's a little fresh that we have right here. But when you're drawing your key levels, you want to look at what the past price action is telling us, because that is the whole goal. Price action can only tell us so much in this tiny spot. But if we zoom out as a whole, we can see a little bit more history of the charts, and we can see more of a general idea of where price likes to respect more times than it doesn't. So now that we have step 2, key levels, we know what they are. They're a range. Price respects it more than 2 to 3 times. The more the merrier. Check. We can move on to step number 3, which is displacement. Okay. And you can change this word out to imbalance. I use imbalance probably a little bit more, but displacement is probably a better word for it. It's something that you want to look for right after you draw your key level. That's the next thing we want to see. And what it is it's looking for large moves up out of a downtrend. That would be a bullish displacement, or looking for large moves down, breaking an uptrend. So if we see here, we are in a downtrend. And again, I look for this on the 4-hour or the 1 hour. So 4-hour, 1 hour, I go back and forth to see where these align, but we are in a downtrend. We get displacement move out of it. We get a break out of this downtrend, and look at this displacement. How do I know this is displacement? Number one is it's creating fair value gaps. If you don't know what that is, hang tight. We're going to cover that here in a little bit, but it is creating large gaps up, and we don't come back and retest this zone ever. Like, it doesn't pull on back, retest it, and then go. I mean, once we break this key level in this downtrend, we get straight imbalance moves all the way to the upside until we get to this range where it chops around a little bit more. But if you look, this is what we like to call imbalance. What questions do you have for me before I move on to step number 4? What if the key levels are different on both time frames? So that probably means you have the wrong key level drawn, because a key level is going to be respected regardless of the time frame you use. 5-minute, 10-minute, 15-minute, hour, 4-hour. If it's being respected on a larger time frame like this, no matter what I zoom into, it should always respect this area. So if they're different and not aligned, it probably means you don't have the correct level drawn. This is a displacement move right here. You see how there's just no coming back from it all the way up here. This is the first time we're ever touching back into these zones, which again, I'm getting a little bit too ahead of myself, but this is the displacement move. And you can even see this on a daily time frame displacement. So overall trend, daily, weekly, key levels, I'm using the 1 hour and 4 hour every time. And if they don't align, that probably means you have the wrong key levels drawn. So kind of look to adjust those and then go with the higher time frame, because if it is respecting it on the daily or the 4 hour or the 1 hour, it's going to respect it in all time frames. Displacement, I'm looking for it on the 4 hour, 1 hour. It might be a little bit easier to see on the 1 hour. So I find myself more times than not going back to the 1 hour because it's easier to see that displacement moves up. So you can kind of see those. Does that make sense? So for the break of trend, you don't really need an exact line. You can just look overall. Like, let's say this line wasn't here. You can just see that we are getting lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And then we get a higher high, because this high right here is higher than this high. So now we just got a break of it. Now we got a higher low, because this low is higher than this low. So we're going to be getting a market shift. So now you can see price come out of it, break it. We are in an uptrend, and then displacement. So my key levels are ranges, as you can see. So whatever range price respects more times than not. So again, I drew this one from, you can see the top of my range to the bottom. The bottom's where I kind of see most of them grabbing. So normally, like if I'm taking a trend, let me find a better one. Like right here, for example, I had this trend drawn right here. Before we even got this retest, I had this trend drawn because I could see the top of the wicks and then the bottom of, these wicks right here. I knew that this was a range that was pretty heavy. And then obviously the more price action we get, I can keep adjusting this range. Maybe this range is a little bigger than what I have drawn. I can widen it up a little bit. Seeing that this range could even be all the way up here. If you guys see my arrow, literally this range probably is this whole area, but I just kind of like to draw the general lowest area that we see price respect. Now that we have those done, step 4 is going to be Fibonacci. I live by the Fibonacci retracement tool. I think it's something that should make your life way easier when trading. It helps you eliminate a lot of these trades that you shouldn't be taking in the first place. I will not take a trade unless it aligns with the Fibonacci, even if it's on my day trading strategy, my swing trading strategy. No matter what, I live and die by the Fibonacci, because you will see more times than not price respects these areas, because there's so many traders that use this, and large institutions use these. And for some weird reason, the whole world follows Fibonacci. And that's another time for another Another day, another time for that story. But Fibonacci retracements is something that is used by widely many and are used without even realizing it half the time they use it. So first thing we want to do to incorporate Fibonacci, because we have the first 3 steps done. So the 5th one is going to be Fibonacci. We can see we have our displacement move here. So you're going to identify the swing highs and the swing lows of the displacement move. So if you're looking at my chart here, down here is definitely the low. We don't see price break this ever right here. And then we can see that this is the high. One of these 2 highs, these are like equal highs. You could have drawn it from this one or this one. None of them is right or wrong, but we got our highs here. So we can see swing low, swing high, check mark, okay, of the displacement move. So we're not sitting here and drawing from here all the way to where price is currently at. It's only of the displacement move, okay? So I'm not drawing it right here. I'm drawing it back here. So right here to right here, the full displacement move. And again, you're going to be looking for this on the 1 to 4 hour charts. That's what I see work best. Again, I like to look at it on the 1 hour because it lets me see things spread out just a little bit more and see the displacement move of exactly where it starts, where it ends, where we kind of break that structure. Just helps me more visualize it. So you can use the 1 hour or the 4 hour, whatever one works best for you. And then we are going to draw our Fibonacci tool, and we want to make sure these 2 numbers are in the settings. You don't need any other numbers except for these 2. And what the middle of this is, which you can see my top line, my bottom line, there's just 2 lines. And that's called your golden pocket. Right in here is going to be your golden pocket. And it is going to be these settings right here. Just make sure these 2 settings are applied, and that's going to give you your golden pocket level. So what you want to do after you draw it from your swing low to swing high, there's not much to really talk about of Fibonacci because it is what it is. Once you have it drawn, it gives you these numbers. You don't got to do any calculations. You're going to look for key levels around the golden pocket, which is the 0.618 and 0.62. Okay, or you can do 0.66, 0.62. I see a lot of different ones, but I use these personally, and this is the one I use for all my swings. But again, you're going to draw it from your swing low, swing high. It's going to give you these 2 blue lines right here, which is your golden pocket, and you're going to look for key levels in this area. So as we're seeing right here, there's a key level literally lining perfectly with it. Okay, so like this is the one thing that's crazy. It is aligning perfectly with our key level we have drawn here. So we can already tell this is going to be a very, very heavy area of support when price reaches it. Okay, now there's a couple more things left. Step number 5, we want to see a corrective pullback. What does that mean? What is a corrective pullback? Well, number 1, excuse my language, no boner candles down to the levels. We don't want to see huge, large candles down to these areas. That's just what we call them here as traders, boner candles. So boner candle is just a very large candle. Okay, you guys can put that together. No boner candles down to these levels, because that would disqualify what we're looking for. Because if we get a huge candle just knifing down to these levels, we instantly are going to just disregard that trade because it is most likely going to go to right here. It's going to blow right through these levels, and it's not giving us enough price action to really trade it off these levels. We want to see a good corrective pullback. So what is a corrective pullback? Normal price action to these levels. Like we want to see normal price action like this. We want to see it zigzagging. We want to see up, or we want to see down, up, down, up, down, up into these levels. Because if you get a knife down, it just disqualifies the whole thing. It's something that we've found over time with testing. So back testing this data a lot, that is something that we just want to kind of forget about. The corrective pullback is just something that isn't a boner candle or a knife down to those levels. Straightforward. You just want to see normal price action, zigzagging, consolidating, up, down, into these levels. And then you want to see it, I guess a better word is you want to see it sweep into these zones, not just freaking free falling into it. You want to see it sweep into these zones. Okay. That's the difference of the 2. That's probably something I should use in the future because that's a little bit easier to understand. So that's the corrective pullback. Step number 6 is going to be a fair value gap. And what is a fair value gap? It is the gap between these 3 candles. It's always a partnership of 3 candles. Okay. So it's always a partnership. So you take 3 candles and you're going to take the difference between the 2 wicks. So fair value gap between 3 candles where price moves too fast and leaves imbalances. So what this is saying is in this huge candle down, price never tapped into it here. We fell all the way through it and price never came back up and tapped into it here, leaving this very large gap right here, showing that when price does return here, there are still more sellers in this area than buyers, showing this huge right here, this huge gap right here. So the middle candle's body doesn't fully overlap the wicks of the candles on each side. So if this is our middle candle right here, the wicks on each side of it don't overlap. There's a gap. Now, let's say this wick came all the way up to here. This wick came all the way down to here. There's no gap. So you're going to draw it from this wick down to this wick, and it's going to be this gap right here where the wicks do not cross each other, okay? It shows price skip that area, likely to come back and fill it later, okay? And as you see right here, what did we do? We filled this area. We filled more orders in this area, and we got an immediate dump down, number one. And then we come up and test it again, and we curled out of it. Now, oh my gosh, why do I keep clicking it? You don't just want to trade fair value gaps, okay? They're never going to work that well to where you can just trade fair value gaps and be profitable, because what happens if this breaks above it and we get a close above it up here? That makes this fair value gap invalid, okay? We can put an X in it. It means it invalidated it. Now it would become an inverse fair value gap, because right here we can see there's a ton of sellers in this area, more than buyers. It shows it's respecting it. Now, if we get a jump through it and we close above it, all we have to do is have a candle close above. Anywhere above this highlighted level, as long as it closes, it now invalidated this one and it flipped it to the other side. So as we see, this is bullish. If we got to close outside of it to the upside here, this is now showing this whole zone is now bullish. So now if we close above it and come back into it, price will more often than not respect it now to the other side. So that is called an inverse fair value gap. So you have a normal fair value gap right here that I have drawn. Now to inverse this, again, we have to get a candle to close outside of this level. Now it is inversed, and now there's going to be more buyers and sellers in this area. Does that make sense to everybody? Because this is something we want to look for while we're getting corrective pullbacks into our area. This is going to be one of the trigger points, okay? What exactly are we going to use the fair value gap? This is going to be one of our confirmations, okay? This isn't going to be the only confirmation we use. It is going to be one of the confirmations we use. So if we have a fair value gap close to our fib level, close to our key levels that we're waiting for price to have a corrective pullback into, and now we inverse one of the fair value gaps that we created into the sweep of our area right here. You can see when I flip it, I can't put my mouse down there, but you can see that blue line. That's the top of our fair value gap right there. It's like barely hanging on down here once this bar goes away. But let's say price creates a fair value gap, and then we sweep into those zones and inverse one of the fair value gaps that it creates down here, sweeping into those zones. That's going to be one of our triggers. Now, we do have a couple more triggers that we can go over at a later time. I just don't have time to get into that right now because I want to spend as much time with you guys after this answering your questions, making sure we can all understand this, because I know we have 57 people in here. I want to make sure we can all understand this and I can get to all of your questions. As much time as we have at the end, the better, okay? Now, step number 7, risk management and position sizing. This is an issue I see probably 80% of beginner traders have. When they first enter the market, they don't understand how much they should properly risk on each trade, as well as what their position size should be on each trade as well. I see a lot of people will just kind of like spin a lottery wheel and be like, oh, this looks good, and then like places a trade. No actual system to anything with their risk or anything with their position size. And let me tell you this right now, this is the difference between a profitable and unprofitable trader. If you can master risk management and position sizing, I think this is a good 80% of trading. Maybe 80 is a little steep, probably 70% of trading, 60%, somewhere in there. You could have a half decent strategy. And as long as you have good risk management and good position sizing, you can be a profitable trader. Now, the reason you don't see a lot of gurus talking about this is because this isn't fun and entertaining to talk about. Nobody wants to talk about risk management and all these roles when you're trading. They want to talk about the dreams, the Lambos, all that fun stuff. And that'll come later on, trust me. But like, you have to have good risk management and position sizing in every single trade in order to be a profitable trader. And I will stand by that till the day I die. So number one, have a set risk on every single trade. Okay. We want to make sure we have our entire trade planned out before we click the buy button. And we have everything planned out as far as how much I'm going to risk on this trade. So once we come up with that number, let's say it's 5% of your account, 2% of your account. For the sake of this class, I'm going to say I'm going to risk no more than $100 on each trade. And I have over $2,000 in my account. I can handle a lot of drawdown. That's what I'm trying to say. You can handle a lot of losses before, you have some trades go your way and you're still going to be okay. Okay. So let's say I have $100. That's my set risk. Number two, going to be your risk doesn't change. Okay. Your risk never changes. I will never risk more than, for the sake of this class, I'm not going to risk any more than that $100. Your size is the only thing that changes. Okay. Your risk never changes. So regardless of what you guys have setting up, you might think, oh my gosh, well, if my stop loss is way out there, I'm going to have to risk more money. No, you're just going to have to adjust your position size. Okay. And that comes to the last one, which is the math equation I use every single trade. I have it so installed in my brain that I don't even need to do the math anymore. I just understand where my account's at, how much I can risk on each trade, and then I do the math from there. So give or take a couple dollars. But you're going to determine your position size on every trade by taking your risk amount, which for the sake of this, again, $100 is what I'm doing. So I'm going to put 100 right here, divided by the difference. Okay, it's divided by the difference of your entry price and stop loss. So let's say my entry price is $1. My stop loss is 80 cents. The difference of that would be 20 cents. So you're going to take 100 divided by 20 cents, and that's going to give you your position size. Now, to make it easy for you guys, I made sure and talked with Jason that we added this to our trading journal because of how much I use this and how much I teach other people to use this. And if you don't want to use our trading journal one, just look up a free one online. It just makes it easier on the software. Now you're going to come right here and you guys will get access to this as well. This is one of the special gifts you guys will get at the very end, is you guys are going to get a free month of our trading journal to help kind of calculate your trades. But it also has a position size calculator. If you guys want other calculators, let me know and I could even send you some websites. But you're going to put your entry price in 70,000. I did this example for Bitcoin. So 70,000 is going to be my entry price, hypothetically. Stop loss is going to be 65,000. TP is going to be 88,000. And my risk dollar amount is going to be 200. My account balance, 2,000. And it's going to give you exactly the amount of size. I don't know why this one didn't give me the size of how much I should be going in. I might have missed something actually. Yeah, I'll find that. But it's going to show your exact risk, what your risk to reward will be on the trade. And then it'll tell you your exact position size you should go in with. So for this one, I did some numbers wrong. But again, this is where it's going to be sharing the exact size. So just to kind of make it easy, we're going to just breeze through it again one more time for all of you guys, just either stepping in now or having questions. Now, this is where we're going to open it up to a lot of questions in every single step. So again, to put it in your brain, here's going to be the 7-step blueprint. You got your overall trend, your key levels, your displacement. You draw your Fibonacci, wait for a corrective pullback, look for fair value gaps or inverse fair value gaps, and that'll be your last trigger as one of the triggers. We have more again, but I don't want to throw too much at you guys. And then we're going to plan our trade, set our risk management and position sizing using that math equation. And that's it. So number one, overall trend. I want to make sure we get to all the questions. Does anybody have a question about overall trend before we move to step 2 questions? Like, let's keep all questions towards each step that we're on, just to make it plain and simple. Any questions on overall trend? I'll give you guys a minute. How do you determine PTs? That's a good question. Which is going to be key levels, which is going to be one of the ways that I do set TPs, is looking for key levels. We're going to move on to step number 3. And I'm going to use this chart for Jason's question about where to set TPs. So for example, you can see our displacement move here. We dropped from the top to the bottom of this move, which is going to be giving us our Fibonacci somewhere through this key level right here, which if we look is right there, which lines up with our key level. So if we go back to here, we know that our Fibonacci is in this level. I wish I could draw it on here right now, but I can't. And what you're going to want to do is, if we do get this trigger right here, you're looking for the most recent swing highs which would be right back to here. So if we do get this, this is a very large swing setting up. Possibly. Obviously, we want to get confirmation down here, but we would be looking to swing this back up to these highs. I'd take half probably at the most recent consolidation levels. So if we do get this trigger right here, I'd be taking my first TPs and possibly even all off, depending on what happens, at like around this 88,000 range. Because again, I mean, I would leave a moonshot for up here, these swing highs, but more times than not, this is a very large displacement move that we're fibbing here, using Fibonacci for. You know, more times than not, they're normally this size. So you're entering and swinging it back up to these swing highs. But again, this is a very large time frame setting up. So it wouldn't be unrealistic to swing this back up to the 100K level over time if we get that setup to happen. Obviously, you know, our triggers have to happen before we look to take a trade. So this is my trading view. Okay. So right here's my Fibonacci. Let's say we just wanted to fib this short move here just for, you know, purposes. Take a screenshot of it right here. These are my Fibonacci settings on TradingView. So as you can see, I end up actually switching over to the 0.66 right there, 0.62. That's why I said something about the 0.62. And then I have this one right here, normally to where I set my stop loss. So let me kind of go back here. So you can see I have this fib level here. Right here technically would be where my stop loss would be, is about 1 to 2 ticks under this bottom level. This third number right here is where my stop loss would be under. So I have that one on there just to show where my stop loss is. And then this is a trade I'm actively looking for. I have alert set. You know, obviously if we get that sweep into it and we get that confirmation out of it, then I would be looking to take a long out of there. This next part, I wanted to show you guys proof, number one, that what we teach and what we have taught to over 55,000 members works. Okay, that's number one. And this is just proof. I couldn't even fit them all on the screen. We have tons of results, and this is probably within the past, I don't know. I would say this is definitely in just 2025. We have so many members banking with this strategy, perfect call outs, like boom, people are using this strategy and making absolute bank. Okay. So what I just taught you has a lot of power. So you guys just need to lock in. And obviously you can't sit there and learn everything from this 1 hour session. Like I told you at the very beginning, my job's to plant a seed in you guys' brain to grow. Okay. That's the number one thing. Now, it comes down to two sides. You can pick a side. Okay. This is what I see happen all the freaking time. And it frustrates me more than anything, but you can pick a side. You can either choose the path less traveled. And this is the one nobody wants to do, but works 100% of the time. And then you have the other way that is traveled the most because everybody's falling for all this false promises by all these gurus. They feel like they get promised the world and they feel like they can believe it. Like, oh my gosh, I'm going to be a millionaire overnight. That's the traveled road. And I hate to break it to you. It's just, you're going to fall back to the same place time and time and time again. So now's the time to lock in and learn one-on-one. Trading can't be mastered alone. Okay, that's the number one thing. It's very hard to do alone. Lots of years of losses paying the market is going to be your biggest thing. Learn strategies we've taught for over 55,000 students. I just showed you guys how many testimonials of our students banking with this strategy. And it's not going to be easy. I'm not going to hype this up. No hype, no gimmicks, just real disciplined trading, okay? Because I'm not going to sit here and say you're going to be a millionaire next week if you just use this strategy, because it's not going to happen. It's going to take growing on this strategy, using it, and building a very strong structure for yourself, okay? This isn't a millionaire overnight. Like I just said, these skills last. Proven methods with one-on-one support so you never feel lost, okay? That's going to be another one right there. Ask questions, get coached, grow faster with guidance, build confidence the right way, slow, steady, and unshakable, okay? Now, I'm going to skip to the last two right here. Most people chase fake results and burnout. I see this all the time, okay? I see a lot of you guys DM me, oh my gosh, I just got scammed. I paid this guru to teach me, and then, you know, it was all a bunch of bull crap. He just handed me a course. You're just chasing fake results. And then you get burnout because you're not a millionaire in 1 week like they promised you. Okay? Is that going to be you? Or are you going to be here to win in the long run? Okay? Are you going to win your year? Are you going to sit down at your desk every single day and learn this strategy to where you're going to become that profitable trader, unlike all these other people chasing these fake gurus' tails and just paying them money after money for their courses that they don't even trade themselves? Or are you going to sit down in here and win the long game and take that path that is traveled far less than the other because it's the one that actually works. And, good things take time, number one thing. Or you're going to keep doing what you're doing over here. Okay. You guys can pick a side here. A year passes. You're still thinking about trading. You've watched 100 videos, but haven't made one real step. You're also falling for all these fake promises. Like we said, all the people with Lambos, no real trades. They're teaching you a strategy. They don't even trade themselves and can't even back up. Lots of other things. Okay. You're not learning and it's costing you time, which time's money. Now, how many more years are you going to waste chasing someday? Like, ask yourself that. How many more years is it going to take for you to smarten up and realize these people with these Lambos and flexing with all this rich lifestyle is just getting you to buy their course? They're not showing real results. They're not teaching you guys strategies that they use themselves. They're teaching you strategies that are easy so people can pay them more money. Okay. You guys pick a side here, either side. Tonight was just the beginning. And I've said that from the first minute of this video. Okay. Tonight is just literally the beginning of your journey. You guys are all new to trading crypto. Crypto is now becoming a lot popular. A lot of people want to get involved with the wrong people and at the wrong times. So let me just make this easy for you. You guys pick a side. Whatever you do from there is beyond me. But I just want you guys to know I want to help you guys grow the right way, not the easy way. It's not going to be easy. I'm not going to sit here and lie to your face that this is going to be the easiest path for you to take. This is going to be a hard path, but it's going to be one that is so much more rewarding and lasting than all these other little courses out there. Now, I'm not saying I have the one ticket for absolutely everybody, because I think that's a false statement as well. And if you guys like what you saw tonight, here's my offer to you. Okay. I need you to listen up right here, lock in with me and listen to this offer that I have, because you guys are going to get a discount for this. So 6 weeks of private one-on-one education for myself and then a couple other crypto traders that we have. 4 sessions per week, live, custom to you guys right here, listening to me, custom. We're going to sit down on a call face-to-face and we're going to break this crap down. No BS. I'm not going to be nice. I mean, I am going to be nice, but I'm going to be straight up honest with you guys of exactly what you need to be doing. Okay. Personalized onboarding, full system setup. We're going to help you kind of do all this. Me, myself, and I. No, I'm not going to just hire someone from India and have them fulfill what I'm teaching. I'm actually going to sit down with you guys because that's how much I care about teaching you guys how to trade. And then join a private inner circle of serious traders. Plus, if you guys book a call tonight, you'll get 1 free month of our trading journal just for showing up. Okay. No BS here. I'm not sitting here trying to sell you guys on fake promises. This is going to be hard and this is going to be tough. But as long as we can lock in right now and grow together, I can promise you guaranteed results. Okay. If you guys take this, I'm going to guarantee you guys profitability. Okay. That's what I do. Your next step is going to be doing the road less traveled. Okay. Enough BS. I think we're all smart enough here. I think we're all smart enough to understand that a lot of these gurus make a heck of a lot more on their courses than anything. Okay. It is what it is. And I can promise you right now that I make a heck of a lot more trading than any of my one-on-one education, because that's where all my time goes to and where I want to succeed. Tonight, I challenge you guys, book this call, hear exactly what we have to say. I'll be talking to you myself. So all I'm asking you guys to do right now, go book a call. For booking a call, you guys get a free month of the trading journal. We'll also hook you up with a couple other free gifts that I can't say because you shouldn't be booking this call for free gifts. What you should be doing is you should be booking this call because you're ready for change. You're ready to do something different. Okay. All right, guys. I really appreciate you guys. Make sure to join that. I will get you all set up. All right. I will do what I do and continue to do. But I hope you guys have an awesome night. Thank you guys for joining in. Hopefully this is the start to a journey for you guys that you're ready to accomplish. But peace out, guys. Love all of you guys. I'm ready to continue to educate y'all. So I'll see you in the Discord. Peace.